Hey guys, welcome back. I hope you had a really great day trading today. So today was Tuesday, October 8th, and while Florida is bracing for Hurricane Milton on Thursday, the markets are bracing for CPI and PPI on Thursday and Friday. And today I did take a red day. I'll explain what I did wrong when we get to SPX. But starting with SPY today, we did open with a gap up and we got back above the 35 EMA. And remember here, when the 35 EMA is above the 30-minute 200 moving average, we are bullish. So we got above that 35 EMA. We had a bullish setup. We were green down here and we did push up to the top of the implied move, which was 572. From there, we did see this down gap from Monday. We did see a little bit of resistance here, and this is where I made the mistake, but I made this mistake in SPX. The 35 EMA was right here, and because we were green down here, I should have known that would have acted as a support, but I went short here, and I did close the day red today. We did bounce on that 35 EMA. We got back up into this gap, which the first time we didn't fill completely right here, but when we bounced on that 35 EMA, we came back up, we closed this gap, and we got just a little bit further into the next gap, and we got pushed out before fully closing it. So this gap right here almost completely closed. That is just under all-time highs. And just like we usually do right before CPI and PPI, which is Thursday and Friday over here, we are flirting with all-time highs. So just under all-time highs for the close today. And that is actually where we've been seeing quite a bit of resistance as well. So SPY did close up 0.95%, and then in SPX, we did see the same price action here. We opened with a gap up, and then we did get back above that 35 EMA, and we are bullish here because the 35 EMA has been holding above the 30-minute 200 moving average. When we move on to IWM, you'll see the difference where over there we've crossed down into a bearish configuration, but in SPX, we are still above the 30-minute 200 moving average with that 35 EMA. So we gapped up above that 35 EMA, and then we took it to the top of the implied move, which was 57.40. This is where I made my mistake here. I actually sold 57.45 bear call spreads, and initially that looked like it was going to be perfect. If I did take profits when we came down to the 35 EMA, that would have been a winning trade, but I decided to hold and we swung back up, and it did turn red for me. So not the best day, not the best trade, but that is okay. We've got new setups every single day. So we did get pushed out of this gap. We bounced on the 35 EMA. Right here you could see we were green over green, and we pushed up to fill this gap completely the second time around. And then in SPX, this is where we see the difference. And if you're gonna be looking at technicals, SPX is a little bit more accurate because SPY actually trades based on SPX. But in SPX, we did not get into this second gap. And this gap right here is right after Jerome Powell spoke 2 weeks ago. We gapped down, and that has been a resistance. We did not enter that gap today. We did get pushed away from it. So we do still have a bear gap just underneath all-time highs in SPX, and SPY did close up 0.95%. SPX closed up 0.97%. VIX came down 5.39%. We're still pretty elevated. We're still above 20. And that felt like a pretty small VIX crush compared to what we saw yesterday, which was plus 17. So very elevated VIX here still. So be aware of that, especially since we have a bear gap right above us and CPI and PPI coming up. And we did not close within the implied move in either one, SPY and SPX. We both closed outside of the implied move. All right, and then taking it over to QQQ, we saw very similar price action over here, And if we look at just the moving averages, the 35 EMA is above the 30-minute 200 moving average, and today we gapped up and we got above both. So we did continue that uptrend. We did switch to green over green right here after the first few candles. We pushed up to the top of the implied move and above. We filled this gap from Monday, and then we pulled back down. 35 EMA was right there, and we pushed up to close even above Wednesday's implied move. So we did close above 489 by 30 cents. We did reach overbought today at the very end of the day, the last two candles here, and QQQ did close up 1.49%, biggest winner of the day. And VXN closed down 2.96%. Again, that's a pretty small move back down considering yesterday, I believe it was 12 and change percent that we went up. So VXN down 2.96%. And here we also did not close within the implied move. And then IWM. This is what I was talking about over here, where we did see that bearish cross down right here. That was last week. And then today we did open flat. We brought it down 1 hour 200 moving average, which has been showing a little bit of support over the past 2 weeks. And that was about it. We bounced on that 1 hour 200 moving average. We got above the 35 EMA, and we stayed pretty choppy around that level. We didn't get a huge bounce, and that may be due to this downward facing 50-day moving average and the fact that we got that bearish cross down. We didn't quite make it into this bear gap that is just above us, and the momentum here on the 30-minute 200 moving average has shifted to facing down. So definitely a few bear signals here, and IWM did close flat today, up 0.07%. RVX did close down 0.54%, so also relatively unchanged. RVX is at 25, which is a pretty high volatility reading, and we did stay completely within the implied move today. And DIA, today we did see a bearish cross down in DIA. We did open flat, came up to the 30-minute 200 moving average, got rejected there, and with that rejection we did get that bearish cross down. So we are now bearish in DIA. So when we did pop back up, the 30-minute 200 moving average did act as a resistance, and we did find support yesterday right here on top of the FOMC rate cut gap, and with that bounce we did bring it back up and we saw that bearish cross down. So wouldn't surprise me if we did come into this gap sooner than later because of all those things that I just mentioned. And so we did get that bearish cross down right here, and I'm just going to look back and see when the last time that happened was. That was right here. And when that happened, now this is really close. The 35 EMA is still really close to the 30-minute 200 moving average. We could pull it right back up and resume being bullish here. But last time this happened right here, you could see the 30-minute 200 moving average, a very clear resistance every time we came up to it. Doesn't mean we didn't have huge swings, but when we saw the 30-minute 200 moving average, it was a resistance. So just be mindful of that. It is right where we closed, and DIA did close up 0.28%, and we did close within the implied move today. And we are still within the implied move for the week. All right, guys, so let's go check out tomorrow's levels. Alright guys, so I really did intend on finishing this video, but I have way too much to do before the storm gets here. So I'm going to flash the trading ranges for tomorrow up on the screen really quickly, and then they're going to be out on TradingView as well. And then the link to that is going to be in the pinned comment as soon as I have it up there. So this is the trading range for SPY. If you've been following me for a while, you know exactly how to read this. So this is SPY. And then taking it over to SPX right here, And the only thing I have missing here is the 35 EMA. Again, should be pretty easy to read if you've been watching for a little bit. And then QQQ right here. IWM. And over here we could extend this 1 hour 200 moving average out a little bit. That was support quite a bit for the past 2 weeks, so that is going to be right here for tomorrow. Definitely the first level to the downside to look for, and then we do have that 35 EMA right above it. But everything else you should be able to read here. I made the gaps a little bit brighter so you can see them. Again, this will be out on TradingView, so check below for the link to that. And DIA right here. And I'll just add in this 35 EMA. It's underneath the 30-minute 200 moving average, and it's going right across the trading range, so definitely keep an eye on these levels here. Oh, and you can't see the top of the, all right, 430 right here. And support right now, remember, we have been staying right above this gap right here. Most likely this will hold until CPI. And that's all I've got tonight, guys. Have fun, trade safe, make sure you take profits when you're up, be safe if you're in Florida, and I will see you guys tomorrow.